Welcome to iEducator. This is Teacher Jeff. I'm an educator and an engineer by profession. And today we will discuss Chapter 6. And Chapter 6 is all about the adjustment. And in today's lesson, there are only two key areas that I'm going to be discussing right now. First, that would be the introduction. And secondly, we have the routine accounting adjustments. So after accomplishing the trial balance in chapter 5 or the previous chapter, we can now start with the adjustment of entries. The trial balance, if you can notice, only shows that we have transferred the figures from the book of original entry, which is the general journal, to the book of final entry, which is the general ledger. But it will not show us that the figures are correctly stated. Instead, adjusting entries will not only update your various accounts, but can also adjust or correct accounts to be fairly stated soon in the financial statements. So what is meant then by adjusting entries? If we say adjusting entries, it can be defined as entries to update or correct an account. And the following are the various adjustment accounts or the routine accounting adjustments. So we have accrued expenses, we have accrued income, we have prepaid expenses, unearned income, depreciation, and we also have doubtful accounts. Now, in order for us to better understand each of them, let us discuss it one by one, starting with accrued expenses. So what do we mean by accrued expenses? If we say accrued expenses, these are the expenses that are already incurred but not yet paid by the company. Now, in order for us to better understand this, let me show you an example. So, for example, a company applying a cut-off period for its payroll can have its salaries and wages unrecorded at the end of the year. The employees have already rendered their services to the company, but the company has not paid them yet because the employees will then be paid in accordance with the cut-off procedure. And to record, we will record accrued salaries amounting to 25,000 pesos. Now, here in the Philippines, it's relevant that majority of the companies will pay their employees, let's just say every 15th or 30th of each month. Since in our sample problem, it is not specified as to what our cutoff period will be. So supposing our cutoff period for the 15th salary, that will be the 25th of the previous month up until the 10th of the current month, and our payday that would be on the 15th. On the other hand, for the 30th payday, supposing our cutoff period is from the 10th up until the 25th of the current month, and our payday is 30th. So supposing today is the 27th, okay? Let's just suppose that today is the 27th of November. And then, of course, the employees, if you're an employee of the company and your payday falls every 15th and 30th of each month, and today is just the 27th, meaning to say you have not received your salary as of yet, right? So meaning to say you already have rendered your service to the company, it's just that you have not received your pay as of yet because the company has not paid you for your services rendered. So this will be our problem scenario. So how do we do this one? How do we journalize this one? So in doing the journalizing, we will debit salaries and wages. That would be 25,000 pesos. And we will credit accrued salaries payable, that would be 25,000 pesos as well. And our brief description, that would be to take up accrued salaries and wages. So later on, we will discuss why we debit salaries and wages and why we credit accrued salaries payable, okay? So let's just have another example first. So another example, a company received its electricity bill for the period amounting to 5,000 pesos. When they received the bill, they had already consumed the electric power, but not yet paid on or before the due date, which might be another accounting period. The entry to update the account will be to record accrued electricity bill 5,000 pesos. So supposing our due date for our electric bill is also every 30th of each month, and let's just say it's still the 21st of the month. So meaning to say, you have already consumed electricity bill. However, you have not paid your electricity bill as of yet, since your due date is still on the 30th. So how do we go about this one? So in journalizing this one, so this will be our adjusting entry of the transaction. This is how our adjusting entry looks like. So we will be debiting utilities expense. So if you want to be specific, you can also make use of electricity expense instead of using utilities expense. That would be 5,000. And we will be crediting accrued utilities payable amounting to 5,000 pesos. And our brief description, to take up accrued electricity expense. Now, like I said earlier, why do we need to debit salaries and wages? Why do we credit accrued salaries and accrued salaries payable? And why do we debit utilities expenses? And why do we credit accrued utilities payable? Now, take note that whenever we take up an accrued expense, we have to debit the appropriate expenses, such as the salaries and wages, utilities expenses, and other appropriate expense accounts, and credit the liability accounts like the accrued utilities payable or accrued salaries payable, as in our example. Actually, for credit, we may not include the word accrued. So we will just write salaries payable or utilities payable. But for illustration purposes, we need to include the word accrued, because it will serve as a reminder that the adjusting entry will be subject for reversal entry later. Okay, so this is all about accrued expenses. Now moving on to another adjustment account, we have here accrued income. Now this is the income that is already earned by the company but not yet received. Now an ideal example of accrued income is the interest earned by the company from its time deposit account. Now in order for us to better understand this, let us have an example. So for example, a company placed its 100,000 pesos into a 30-day, 12% time deposit with Bank X on December 18, 2013. Now, remember that we have here given values. So for our cash, we have 100,000 pesos. And for our interest, we have 12%. And for our number of days, we have from December 18 up until December 31st. Now remember, going back to our example, since we placed 100,000 pesos into a 30-day period, 30 days our maturity period, 12% time deposit with Bank X on December 18, 2013. Now, in other words, what we need to do here is to calculate the interest that we are going to be receiving, okay? Since we placed our money into a 30-day maturity period with a 12% time deposit. Now, in order for us to calculate the interest, we will multiply our cash, 100,000 pesos, to the interest 12% and the 13 days as well. Remember, to complete the whole year, so from December 18 up until December 31st, so we have 13 days. And in accounting, we will be dividing it into 360 days. Now, the amount for our interest, that would be amounting to 433.33 pesos. This further means that from December 18 to December 31st, the company already earned an interest which the company should recognize, but it cannot be received yet because the interest can only be received upon the maturity of the time deposit. So how do we go about with the adjusting entry? So this is how our adjusting entry looks like. Okay, so we have accrued interest receivables. That would be 433.33 pesos. And we also have to credit interest income, 433.33 pesos. Now, why did we debit accrued interest receivables? Remember that if we see accrued interest receivables, it's a form of an asset. Now, since we increased our assets, so if we try to go back to our basic rule on how to debit and how to credit, if we increase our asset, then we need to debit the account. So that's the reason why we debited accrued interest receivables. And on the other hand, since we increase our capital, which is our interest income, so going back to the basic rule as to when to debit and when to credit, so if we increase our capital, then we need to credit the account. As you can recall, this is under model number 1. Model number 1 states increase in assets, increase in capital. So in every increase in asset, there is also an increase in capital. So our brief description would be to take up accrued interest from time deposit made with Bank X. Okay? And like I said earlier, we may not write the word accrued, so you may write interest receivable only instead of accrued interest receivable. But again, I would like to reiterate, for the purpose of illustration, we need to include the word accrued because it will serve as a reminder for us that the adjusting entry will be subject to reversal entry later. Okay, so this is all about accrued income. Next adjustment account that we have, that would be prepaid expenses. So what do we mean by prepaid expenses? If we say prepaid expenses, these are the expenses already paid by the company, although not yet incurred. So to recognize the adjusting entry, it depends on the method used by the company. So in this case, in this type of adjustment account, the company usually use either asset method or expense method. Now, in order for us to better understand each of these methods, let us have an example. So for example, a company paid a 6-month advance rental amounting to 120,000 pesos on August 1. So in this example, we assume that the company doesn't have its own land or building. So if that is the case, normally what will happen, companies will look for a commercial building to rent. Okay, so in this case, they have to rent a building or a land. So this happened on August the 1st. So this is from August 1st transaction. Now, how do we go about with this one? So what would be the first step in solving this kind of problem? Now, the first step that we need to do is to draw a T account, okay? So as you can see, we are drawing a T account right here. And step number 2, we need to write the amount you have paid in advance on top of the T account. And after, divide it with the number of months the advance payment covers to come up with the monthly amortization. Now, let us try to go back to our problem. A company paid a 6-month advance. Okay, so meaning to say, the total months covered is 6 months, and the amount that we paid is 120,000 pesos. So going back to step number 2, so in doing that, this will be how our T account look like. So we have there at the top of our T account, we wrote 120,000 was the amount that we paid as an advance payment for our rental. We divide it by 6 months, or the coverage of our payment. So that would be 20,000 pesos per month. Now, what's step number 3? In step number 3, we need to write the month and date of the advance payment named and draw an arrow toward the demarcation line. If we say demarcation line, this refers to the line that divides the left side and the right side of the T account. So this is actually our vertical line of our T account. So this is how it looks like. Remember that our transaction date is August 1st. And from our date, August 1st, we need to write an arrow going to our demarcation line, the one that divides the left and the right side. So that is how step number 3 looks like. And step number 4, we should count the number of months from the date of payment to the demarcation line and then multiply it by monthly amortization shown on step 2. Remember that our monthly amortization is 20,000 pesos. This is how step number 4 looks like. As you can notice, we have here the transaction date, or the date of our payment, August 1, and an arrow going to the demarcation line. And we also have a total of 5 months from the date of payment to the demarcation line. And we then multiply this one to the monthly amortization, which is equal to 20,000 pesos. So 20,000 multiplied by 5 months, so that becomes 100,000 pesos. And lastly, step number 5, we need to get the difference between the amount you actually paid as advance payment shown in step number 2 with a figure you have computed in step number 4. Write it on the right side of the T account, parallel with the figure in step number 4. Okay, as you can see, this is how step number 5 looks like. Remember that we have computed 100,000 pesos, right? Now, if you try to go back to the top portion of our T account, remember that our advance payment is amounting to 120,000 pesos, right? So 120 minus 100, so that becomes 20,000 pesos. So whatever is remaining, we will be writing that down on the right side, okay? Parallel to our 100,000 pesos. So what is meant by this? What is its implication? Now, as its implication, 100,000 pesos represents the amount already used by the business as of the demarcation line, which is the accounting period of the company. This is the expense portion of the advance payment at the end of the accounting period. On the other hand, the 20,000 pesos represents the amount not yet used by the business as the demarcation line, which is the accounting period of the company. This is also the asset portion of the advance payment at the end of the accounting period. So how do we journalize this one? So how will our adjustment entry look like? So in journalizing this one, there will be 2 entries, okay? First is the asset method, and second is the expense method, depending as to which method the company is employing. Now, first, let's have asset method first. Now, if the company is using asset method, your debit side in the adjusting entries should recognize the expense amount. So in our example, using the asset method, therefore, our account to be debited is rent expense, because again, I would like to reiterate, if we are employing asset method, we should recognize the expense amount. And since rent expense is an expense account, that is why we need to debit it. And prepaid rent should be credited. And the brief description to adjust prepaid rent account. And on the other hand, if the company make use of the expense method, then the adjusting entry will be prepaid rent to be debited 20,000 pesos and rent expense to be credited 20,000 pesos. And brief description is to adjust rent expense. Okay, so this is all about prepaid expenses. Okay, going on to the next adjustment account, we have unearned income. So what do we mean by unearned income? If we say unearned income, this is the income already received by the company but not yet earned. In other words, this is the advance receipt coming from the customers. Okay, now like the prepaid expenses, the adjusting entry depends on the method used by the company, because there are also two methods under this account. These are the liability method and the income method. Now, in order for us to better understand what unearned income is all about, let us have an example. So, for example, a company received a 6-month advance rental amounting to 120,000 pesos on August 1st. Now, like the prepaid expenses, the first step that we need to do is to draw a T account. And the second step, we need to write the amount you have received in advance on top of the T account and divide it with the number of months the advance payment covers to come up with the monthly amortization. And so for that matter, this is how our step number 2 looks like. So at the top of our T account, we indicated the amount of our payment, 120,000 pesos, and we divided by 6 months, so a total of 20,000 pesos per month. Or in other words, this is our monthly amortization. And next, we need to write the amount and date of the advance payment made and draw an arrow toward the demarcation line. Again, if we say demarcation line, this is the line that divides the left side and the right side of our T account. So this is how our step number 3 looks like. And step number 4, we need to count the number of months from the date of payment to the demarcation line and then multiply it with the monthly amortization shown in step number 2. So this is how step number 4 looks like. So same way the previous example, we have August 1 and total number of months from the date of the payment, we have 5 months multiplied by our monthly amortization of 20,000 pesos. So 20,000 multiplied by 5 months, that would be amounting to 100,000 pesos. And for the final step, we need to get the difference between the amount that we actually paid as advance payment shown in step number 2 with a figure we have computed in step number 4. So this is how our step number 5 looks like. Remember that the actual payment that we paid, that would be 120,000 pesos, deducted by 100,000 pesos. So the remaining is 20,000 pesos. So what is meant by this? Now, 100,000 pesos represents the amount already earned by the business as of the demarcation line, which is the accounting period of the company. This is also the income portion of the advance payment at the end of the accounting period. On the other hand, the 20,000 pesos represents the amount not yet earned by the business as of the demarcation line, which is the accounting period of the company. And this is the liability portion of the advance payment at the end of the accounting period. So how do we go about the journal entry? Okay, so this is how our adjusting entry of the transaction looks like. Now, if the company is using liability method, our credit side in the adjusting entries should recognize the income amount. In our example, using the asset method, so therefore, we will be debiting unearned rent incomes, okay, so amounting to 100,000 pesos. And for the rent income, it should be credited amounting to 100,000 pesos. And the brief description that would be to adjust unearned rent income account. So what about if we make use of income method? So if the business or the company is using the income method, then the adjusting entry will be rent income to be debited amounting to 20,000 pesos and unearned rent income to be credited amounting to 20,000 pesos. And the brief description that would be to adjust rent income. Okay, so the next adjusting account that we have, that would be depreciation. And if we say depreciation, it is the systematic allocation of the cost of an asset. And the straight line method is normally used in computing the depreciation of a certain asset. So this is how the straight line method looks like. So this will be the usual formula of depreciation. So using the straight line method, so our formula would be cost minus salvage value divided by the estimated life. If we say cost, this is the acquisition price of the asset that we purchased. And if we say salvage value or scrap value, this is the selling price of the asset after its estimated life. And if we say estimated life, it is the estimated effective use of a certain asset. And in order for this one to be more meaningful, let us have an example. So supposing a company purchased a car amounting to 500,000 pesos on August 1st, 2013. Its salvage value is 200,000 pesos at the end of 5 years. So as you can see, it is clear that our cost or the purchase price of this vehicle is amounting to 500,000 pesos. And after 5 years that we have used our car, so its value depleted, it depreciated from 500 to 200,000 pesos. And estimated life of the car is 5 years. So applying our straight line method, so all we need to do is to plug in the values to our formula. So our cost is 500,000 pesos deducted by the salvage value of 200,000 pesos divided by the estimated life, which is 5 years. So therefore, our depreciation is 60,000 pesos. And if we try to journalize this one, remember that we have an indicated month and date. So in this case, this happened on August 1st. So our month will be August and our date is 1. And under particulars, the account that we will be debiting will be depreciation amounting to 60,000 pesos, and accumulated depreciation will be credited amounting to 60,000 pesos. And our brief description that would be to take up the depreciation for the period. Now question, why is it that depreciation is the account to be debited, and why is it that accumulated depreciation is the account to be credited? Now remember, if we talk about accumulated depreciation has a credit balance because it aggregates the amount of depreciation expense charged against a fixed asset. Okay, so this account is paired with a fixed asset line item on the balance sheet so that the combined total of the two accounts reveals the remaining book value of the fixed asset. And over time, the amount of accumulated depreciation will increase as more depreciation is charged against the fixed assets, resulting in an even lower remaining book value. Now, since fixed assets have a debit balance on the balance sheet, then accumulated depreciation must have a credit balance in order to properly offset the fixed asset. Hence, the accumulated depreciation appears as a negative figure within the long-term asset section of the balance sheet, immediately below the fixed asset line item. And next, we are actually not done yet. So next, we need to compute the depreciation for the month, divide by the result by 12. So since our monthly depreciation as computed in the previous slide is 60,000 pesos, we need to divide it by 12, okay, 12 months. Now, depreciation per month now becomes 5,000 pesos. So the depreciation from August to December will be 5,000 pesos multiplied by 5 months. So therefore, that would be amounting to 25,000 pesos. So how do we do the journalizing of this one? So this is how our adjusting entry of the transaction looks like. So again, our month is August and our date is 1. So the account that we will be debiting is depreciation amounting to 25,000 pesos, and accumulated depreciation is the account to be credited amounting to 25,000 pesos. And the brief description that would be to take up the depreciation for the period. Okay, so this is all about depreciation. And finally, the last adjustment account that we have is what we call doubtful accounts. So what do we mean by doubtful account? Now, if we say doubtful account, this is the portion of the estimated collectible accounts. Now, if the companies have accounts receivables or receivables from the customers, we should not expect that all of these receivables are being received by the firm, okay? There is a portion of that receivable that is not paid by the customer. And in other words, that is what we call doubtful account, a portion of the estimated collectible account. Now, the estimate can be based on a percentage of income, sales, or a percentage of accounts receivables, just like what I just said earlier. And take note, when it is based on income or sales, the business enterprise would determine how much of that income or sales will not be collected or what the effect of the possible uncollectible accounts is to its earnings. So in order to use this method, we need to multiply the amount of net credit sales with the estimated percentage of accounts that cannot be collected. So in order for us to better understand this, let us have an example. So for example, the total income or sales made by a company during the year is 100,000 pesos, and an estimated 2% of its income or sales are uncollectible. And so the entry will be, a doubtful account will be debited amounting to 2,000 pesos, and allowance for doubtful accounts will be credited amounting to 2,000 pesos. And the brief description, that would be to take up doubtful accounts. Now, the entry would be different if it is based on accounts receivable, because in this particular example, we are actually basing on the income or sales. But if we make use of accounts receivable, then the entry would be quite different. The business enterprise would want to know how much of the receivable may not be collected. So here, The enterprise has an emphasis on the asset presentation than the income determination. And therefore, if we make use of this method, you still have to deduct the present balance of allowance for doubtful account after multiplying the accounts receivable with estimated percentage of doubtful accounts. So for example, the balance of accounts receivable is 200,000 pesos and the allowance for doubtful account is 5,000 pesos. The company estimates that 10% of the accounts receivable is doubtful of collection. So this is how we will be computing our doubtful accounts if we make use of accounts receivable. So remember, based on our problem, the amount of our accounts receivable is 200,000 pesos, and the estimate that the company did on its doubtful accounts is 10%. And so for this matter, 10% of 200,000, that would be 20,000 pesos. And again, based on what I have just said earlier, if we make use of accounts receivable, the entry would be quite different because we still have to deduct the present balance of allowance for doubtful account after multiplying the accounts receivable with the estimated percentage of doubtful account. So based on our problem, the balance of allowance for doubtful account is 5,000 pesos. And so for that matter, 20,000 less 5,000, so that leaves us with 15,000 pesos. And if we will journalize this one, this is how it will look like. So the account that will be debited is doubtful account amounting to 15,000 pesos, and the account that should be credited is allowance for doubtful accounts, which is 15,000 pesos. And the brief description: to take up doubtful accounts. Now question, why is it that doubtful account is the account to be debited, and why is it that allowance for doubtful account is to be credited? Now remember, when determining how much uncollectible customer debt to write off, an associated account called a contra account is actually used. Now this helps to keep financial books straight while also allowing the company to see the amount in doubtful accounts. Now what is meant by contra account? If we say contra, it means against. Now this type of account is used to offset an asset account. Now since we are discussing doubtful accounts, the offset will be against accounts receivable. So how does a contra account work? Now accounts receivable is usually a debit balance. Its contra asset account is called allowance for doubtful accounts, and it will have a credit balance. So when we add these two balances together, they offset each other, revealing the amount possible to collect in the accounts receivable. In other words, the net accounts receivable amount. So this happens because the contra asset account has already accounted for bad debts, or those that are not likely to be collected, and those bad debts are simply subtracted out of accounts receivable. So that's the main reason, or that's the reason behind why doubtful account is being debited and allowance for doubtful accounts is being credited. All right, I think that's a good place to stop. If you have questions, please let me know on the comment sections below. And if you like this video, please don't forget to subscribe and hit the bell button for the latest updates. Thank you.